Yo, what's poppin', everybody? We are back with another, and I mean another breakdown. Let's get straight into it. Today, we're going to be looking at a 2 for 2 play on the S&P 500. Let's get straight into the charts, ladies and gentlemen. We are going to have a great time today, as we always do. Lots of learning, lots of fun. So anyways, y'all, let's get to it. We had a huge gap in the market. Now, gaps, a lot of people want to trade them. Very often do we not feel the gap until later on in the day or days later. And this is a common trap that a lot of people get trapped in because they think it's just easy money. Anyways, we have price making its way down, and then you have a lot of consolidation right here. This is a lot of buildup. This is where people want to take breakout trades to the downside to try and fill this gap. But I saw it a little bit different. I saw we had a low, failed low, and then the break of the high of the failed low, which the model looks just like this: low, failed low, high, broke, and retest. So I had put my entry here. And the reason why I decided to go was because after I saw this rejection again in this area, I wasn't going to go into it straight away, which is why my entry was right here and not right here. I wanted to see how it would actually react. So once I saw the pushback that the demand was giving right here, I was like, okay, I'm comfortable enough to get in there. Now, you're going to see something. I didn't have a stop loss. Now, can be a good or a bad thing. In this case, it was a good thing. The reason why I didn't put a stop loss here was because, and you saw it in the picture before, we went to the charts. You saw the picture. I was highlighting all of these wicks. I understood that these are liquidity wicks, or not necessarily liquidity wicks, but this is where all the buying pressure, all the high buying pressure is. So I understood that if we were going to make our way to the upside, we probably were going to make one last grab of it. And we did. Oh, well, why didn't you just put your entry there if you knew that it was going to or you knew it was most likely going to return to that area to grab liquidity? Well, sometimes it doesn't do it. It literally is just luck, flip of a coin. That's just the reality of it, dude. So anyways, we went ahead and took the grab, and we made our way to take profit. Now, as you guys see, this is not a one-to-one. Instead, what I did was I identified this imbalance that was caused making the expansion, and I put it at the bottom of that imbalance. I didn't know if it was going to go all the way through, so I wanted to make sure that if it did get here, that it was going to go through my take profit first. Now, on the second trade, we have price playing around. I'm still bearish on it, but I want to capitalize on every opportunity. Now, what do we see right here? Okay, what I'm seeing is this was the high that was made. We broke the low. You see this? This is structure being made inside. Break. We're going to be trading off of their failed high, break of the low of that failed high. And what do you see? Price going down. We did break here, but now we have this new range right here. Coming up, high, low, high, break. And we are going to enter at the bottom of this break for a nice one-to-one. Because I'm still real cautious of this area. There's obviously a lot of power right here still. So I wanted to just collect my one-to-one and keep it pushing. And that is exactly what we did. Ladies and gentlemen, that is it. I hope you guys enjoyed the breakdown. I hope you guys go and check out the other breakdowns that I have. I have hours of it in the playlist. Make sure you check it out. I don't do any crazy strategies, no crazy indicators. I just watch what price does. And 9 times out of 10, it will tell me where it needs to go almost every time. And on that note, y'all, I will see you on the next video, and I will see you later, baby.